And welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Thursday afternoon or morning, depending on where you are. Before we jump into the markets, let's get the usual disclaimers out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using in this live stream, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I recommend, if you haven't done so, is go and check out the Elliott Wave principle. So this magic book here that contains the strategy that I mostly use, which you can read online for free when you're using the link in the description down below. With that, we can jump straight into it. And as we can see, yesterday and the day before, we had a slightly positive start into the day. And today we have a slightly negative start into the day because GameStop, after rallying a little bit, now obviously retraced a little bit again. We're going to jump into that in a second. Before I forget, also don't forget, like, subscribe, enable notifications if you want to make sure you don't miss out on future episodes. Or at least hit the thumbs up button. So yeah, to do me a favor. Now, anyway, not much change in our portfolio because our exposure right now is quite GameStop heavy due to the 500 shares that we got assigned through selling $30 put options already a couple of weeks ago. And against those, we are writing now call options every week at the $30 strike price, which we, until the shares get called away or until we decide to not write call options anymore, either way. So looking into that, so if we look at GameStop, we covered it yesterday. I mentioned yesterday, around market open, we talked about it, that potentially we still get a fifth wave move. The fifth wave move actually almost perfectly hit our 100% target. It missed it by 2 cents. So we see we reached 24.54, and our 100% prediction target would have been at 24.56, which means that this here marks a complete 5-wave impulsive pattern. So we're on the hourly chart here with GameStop, which means we have a 1, 2, 3, 4, 5 here. It's also surprising, actually, I almost forgot. 1 second, I'll just have to open something up. Just a moment. I think I saved it or not. So here, So today, while scrolling through Reddit, I saw a post that basically, people are wondering that the movement that we see now is similar to the movement that we saw in January 21. You can see basically movement up, a little bit down, strong movement up and sideways movement, strong movement up, sideways movement, then strong movement up, and so on. And I'm always surprised, so I don't need that post anymore. It was just for this specific purpose. I'm always surprised that not more people are recognizing why and how, because at the end, that is exactly the Elliott Wave impulsive pattern. Wave 1, Wave 2, Wave 3, Wave 4, Wave 5. So now considering that yesterday we pretty much, focused on the smaller scale, but we also looked at the bigger scale a little bit in regards to GameStop. Now we obviously finished a 5-wave impulse up. So now we are in a corrective pattern, which means we're now correcting those 5 waves. Usually the correction would finish in the area of wave 4 of the previous impulse wave of a lower degree. So if we ignore everything before right now, then we would have wave 1. So wave 1, and we're currently in the corrective wave 2, which means the previous impulse wave is wave 1, and a lower degree means subdividing it, so labeling it as 1, 2, 3, 4, 5. So the area of wave 4 of the previous impulse wave of a lower degree is the area right here. Also, in addition to that, we would usually expect that we retrace 38.2, 61.8, or 50, or if it's none of those 3 levels, so I mentioned them in quotes the priority, so 38.2 and 61.8 have the same likelihood. 50% would be something that happens here and there. 78.6 and the 21.4 levels are less likely to happen. But those would be the usual levels overall where we would expect a corrective pattern to potentially finish. Now, we don't need the channels that we put on the chart based on Kennedy channeling technique anymore. If you're wondering what they are and how they work, I recommend you check out yesterday's episode of Daily Market Mastery. It's a little bit hard to see a clear free wave pattern in here, so I'm not going to be able to say or provide any kind of prediction like if we are already finished with the correction, if we will finish at the 50% mark or at the 61.8. If we, however, consider the guideline that usually a corrective pattern finishes around wave 4 of the previous impulse wave of a lower degree, we would expect that we end up around somewhere here, which is closest to the 61.8 retracement, which means it's possible, I mean, no guarantees here, but it's possible that this somehow plays out as A, B, and then wave C takes us down to 21.95 or relatively close to it. Now, obviously, we could go further down. The correction theoretically could retrace 99% of this whole move. If we would retrace the full 100 or go below 2049, the pattern would become invalid, and it would mean I made a mistake somewhere. Although one has to say that this is a 5-wave impulse pattern, like in the book, in quotes, like almost perfect. So making it very, which would make me very, very surprised if indeed we would end up with an invalid pattern. Now, again, it's also possible that we already finished the retracement, that it's somehow like A, B, C, and from here we're going up. So that option is also on the table. However, we did not, and we are technically already in the area of wave 4, because wave 4 basically is from either from this high down here or from this high down here. So considering that we are already within the area of wave 4 of the previous impulse wave of a lower degree. However, again, very often retracements hit pretty much or briefly just spike through 38.2 or 61.8 and less likely the 50% level. So I think that it's like more likely that we'll get a little bit of a move up for wave B and then followed by wave C down. Now, to visualize that, if we have a zigzag corrective pattern, like for full transparency, I'm always simplifying the corrective patterns and assuming that in most cases it's a free wave move, because in most cases it is. And if it turns out to be a zigzag corrective pattern, we can use wave A, then wherever wave B leads us in an expansion, and we then get the 61.8 and 100% expansion levels that provide us with the minimum target for wave C and the max, or not maximum target, but like the second or the perfect target actually, because zigzags, one of the possible corrective patterns, and in many cases the most likely. To look at our cheat sheet, that's linked in the description down below as well. Wave 2 is with 42% probability a zigzag, which is a free wave move, and with 40% probability a flat, which is also a free wave move, although it subdivides a little different. So if this would be a zigzag correction, then this is what we would do. Use an expansion A, B, potentially, and then we'll get our wave C area. So it's possible, assuming that this is indeed a wave A down, corrections are the harder part to label. It's possible that, for example, our wave B is already this, but on a smaller time frame, and then our wave C would slowly take us down, for example, here, which would overlap with the 61.8 retracement at 21.95. Either way, so long story short, in GameStop on the hourly time frame, it is possible that the correction is already over. It is possible that we still have to or get another push down. Personally, I consider the 61.8 retracement level relatively attractive. If you were to enter just now, you could put your stop loss at the low at 20.49, which is a little bit more than 10% risk. So because if we break that, then something is wrong with the entire pattern. So I made a mistake. And other than that, entries are already possible now with the assumption that maybe the correction is already finished. However, as said, like I would rather enter potentially, if I wouldn't already have exposure to GameStop, I would rather enter at the 50 and 61.8 retracements here. Shorting it right now, probably not the smartest idea. You would need to put your stop loss at 24.54, which also gives you a 10% risk. However, the reward ratio is relatively small. So even if we would retrace to the 78.6 level, you at best would get a 1-to-1 ratio. And don't forget, just because you set a stop loss somewhere doesn't mean that it will trigger at that price. If the price jumps drastically, you could also have more losses. That obviously also goes for a long position. So if you're long and you put your stop loss here, it's also possible that we gap there or have a very strong move and then suddenly your order closes somewhere else. However, considering GameStop specifically, I personally would avoid short positions overall. If at all, and you feel like you have to bet against GameStop, then buying put options is probably the smarter play. While you there have a time limit to consider for your trade to be profitable, you have a limited risk that is the maximum, or that is or a fixed risk in the height of the premium that you paid for the put options. Now, anyway, you do with that information what you will. Nothing changes, so we're gonna zoom out a little bit. Nothing changes from the overall prediction in GameStop. Need to zoom out a little more. We're still waiting for a break of the 25.24 mark, which is this high here, to kind of confirm that we indeed finished our correction with the low here, and more or less eliminate the chance for another push down to the 78.6 retracement that so far would, in theory at least, still be on the table. It's possible, although I'm not gonna say it's likely, that somehow this here is, I don't know, A, B, C, A, no, then, yeah, A, B, C, no, so A, B, C, so 3-wave correction move, somehow 5-wave move down, and this here is A, B, C as well, because in an A, B, C we would have 5 waves, 3 waves, so A, B, C again, and then 5 waves, and we just had 5 waves. So there is the option that indeed this is also just a part of the bigger corrective pattern that would be followed by a 5-wave impulse down. Hence, if you go long right now, the stop loss should be at 2049. If we get to see a 5-wave impulse now instead of just a 3-wave corrective move, we would have, in quotes, our confirmation that, or yeah, not full confirmation, but additional evidence that we indeed are first going to go further down, potentially as said to the 78.6 retracement. Yeah, that about GameStop. So overall, I'm bullish on it. So while short term, still both sides are on the table. Midterm and long term, I believe that we will definitely go above $30 per share again. I'm not gonna say yet how far I think we could go or will go, because for that I need to become relatively certain that the correction actually already finished, and so far we don't have that certainty because we still have the option that this is a 3-wave corrective move followed by a 5-wave move downwards. Yeah, moving on, Barnes & Noble Educational, we covered it yesterday as well. I think somehow my forecast there is wrong, or at least what I have. We covered it extensively yesterday. So I mentioned yesterday that I'm trying to get my assistant to keep track of the different predictions and in which episodes I'm making them. And I'm fairly certain that I did not say 840 or 831 here, or actually, so especially not 840 and 831, because those were marks that are below our entry point. Unless, no, not even unless, because we have a perfect 3-wave zigzag here, a 5-wave impulse here, and we're just not sure how far this correction will go. So somehow I'm gonna have to chastise for that, or at least I have to double check. I'm gonna take a note. So so the whole idea is obviously that we have an easy way, first of all, for me to recall what I shared with you previously. But what's so funny? But second of all, also to have an easy way to keep track of when I'm right or when I'm wrong. And yeah, if we zoom out, so let's zoom out weekly. I don't know how far we have to zoom out. Oh yeah, so we have the low here, and basically option number 1 would be that this is somehow wave A, wave B, and then we get wave C, which would mean we would go, given enough time, potentially higher than we've been here. Option number 2 is this is somehow a 5-wave impulse. Wave A, for example, wave B isn't finished yet, but that's only wave B would subdivide into A, B, C, which would be 5 waves, 3 waves, 5 waves. So our actual prediction here, zooming in a little bit here, our minimum prediction for that whole thing here actually used to be that. So definitely is 1420. So I don't know. I have to remember, I have to write it down, sorry, notes. So I have to write down what she had written there originally. Keep out of time. So BNet, she had 842 to 831, which is also wrong. So right when you're watching this, obviously the lower value goes into the first prediction field and the higher value into the second prediction field. Although one could argue, no, actually you're right. If your prediction would be negative, then the higher value is the one that would be the first target. So never mind that. But again, the prediction itself is definitely not what I shared, because the long-term prediction is minimum target 1490 and maximum target based on this labeling of 1976. So because in the worst case scenario, as long as the Elliott wave pattern stays valid in quotes, this would be a big A, B, and then wave C move. And in actually worst case scenario would be this would need to be a corrective wave, and this would be 5 waves down followed by 3 waves up. And either way, then we would expect to have A, B, and then wave C reach the $14.20 or the $19 mark, or go down. The next alternative would be we actually have our first impulse up, corrective wave down, impulse, correction, and we get a wave 3 here, which would then have targets that are even higher. Yeah. So, but the minimum targets here that I see are definitely, hourly is definitely too low here, are definitely higher up. So, and while I might have said yesterday that we are going to potentially correcting here, I'm fairly certain that I did not mention what did we have, 842 and 831, because those prices would cause an invalid pattern here. Yeah. What I might have mentioned is it's also possible, while this is a nice 3-wave corrective pattern, that the correction itself is not fully finished, in which case this would be another potentially 3-wave corrective pattern, and then maybe we get another 3-wave corrective pattern. But considering all the aspects that we have a perfect 3-wave move here that turns around exactly at the 61.88 retracement, which happens to be very close to the end of wave 4 of the previous impulse wave of a lower degree, I'm fairly confident that we indeed finish this correction and are now looking at the next 5 waves up. So, and those 5 waves up subdivide into wave 1, wave 2 in progress right now, and then we get the stronger wave 3 upwards. So while there's still the chance for a couple of days more corrections to wiggle around in this area and finish the corrective pattern, I actually expect relatively strong upwards movement in the next couple of weeks. So yeah, so much about Barnes & Noble Educational. Or Education Inc. Yeah, I always say educational, but you guys know what I mean. Overall, so actually I'm going to move this a little bit to the side so you see that's the area I'm talking about, the usual suspect, 38.2, 50, 61.8. Yeah. Now, as far as the correction go, we are already in the area of wave 4 of the previous impulse wave here as well. We now bounced at the 50% retracement, which would also be close to the bottom of wave 4. 61.8% retracement still possible, however, because then we would just go barely below the previous impulse wave 4, so the wave 4 of the previous impulse wave. Visually, it's hard to see a clear corrective pattern, so a 3-wave move in there. So it's possible that this asset will only be wave A, then we get a little bit upward movement, and then for wave B, and then we get wave C further down. Again, there is an 80 or a 40% or 42% chance that it plays out like this, A, B, C. There is also a 40 or 42% chance that it plays out like this, A, B with a new high, and then C, which is hard to catch. Yeah, so that's there I trip up sometimes labeling flat corrections. And there is then basically as a result an 18% chance that it's a different kind of correction, a combination of corrective patterns or something else. So anyway, Barnes & Noble Educational asset, profit targets that I've already been proclaiming for a couple of weeks, but officially on the record, we will have it as of, I will double check if I mentioned it yesterday in the stream already and my assistant made a mistake, or if it's only today that I officially shared that, and will update my sheet accordingly. And with that, we're moving on. Now, we already covered GameStop for today, which brings us to Grab. In Grab, we have targets of 942 to 1088. And I am not, no, actually, that's what I said yesterday. Yeah. So here we have actually 2 options. I covered it yesterday as well. We went into Grab yesterday in detail. So if you want to know more about the Grab forecast, please check out yesterday's episode. One option is we basically reached our bottom, and from here are forming our next 1, 2, 3, which would then have this, the 261.8 retracement as the target. and basically the lower target would be 942. Now there is also the chance that we only reach the 161.8 extension levels, not retracement. Yeah, sorry. But very often, or usually, a third wave would reach the 261.8. Yeah, sometimes a little bit more. So like the next one, 338, 361 or so, or even higher, and sometimes only here. But usually, or in the most common one that I experienced so far is the 261.8 level. Now, if this is indeed the bottom, we would be looking at wave 1, wave 2, either till here or till here, and then we would be right now in the beginning of 1, 2, 3, 4, 5 for 1, 2, 3, 4, 5 to finish the third wave and ideally take us up here over the next couple of months. Yeah. The worst case scenario is we are in a downwards impulse, and this is just a corrective wave that subdivides then as A, B, C, in which case that might actually be as good as it gets, and from here we are going to go further down. We would know if that's the case if we break the 290, for example. So there is a little bit of risk entering here. I bought the call option that I have, the Leaps call option that expires in January 26, somewhere here. I don't remember. It was like, yeah, I mean, it was not January since we only in May switched to Interactive Broker, so it was somewhere here in that area, and it looks like it's going to pan out. So far we're moving in the right direction. Since I only have a $50 risk on that option, I'm just gonna wait and see how it runs out, and in between we're gonna label it. So, but the forecast on the file seems to be the correct one, so we can move on, because also we're looking at a weekly chart here, so it's gonna take weeks or months, actually months, to see the pattern develop further. We could look closer and, for example, just label this area here, then we would be able to potentially forecast the correction. But even here on the weekly chart, this looks like 1, 2, 3, 4, 5, which means we would again expect the retracement into the area of wave 4, which, so this looks like 1, 2, 3, 4, 5. And we would again expect the retracement into the area of wave 4, which would be here. So if we indeed finished 5 waves up here, we would expect that the current movement brings us down potentially to 355 again to finish wave 1, wave 2, and then we would get the next impulsive wave up. Might move the camera up. Let's put it up here for now, which probably is going to then conflict or be an issue again on the next chart. But yeah, so grab forecast is correct. Now immersion forecast is definitely, or I think that's also off. Yeah, there we looked at the bigger picture. Let's see how far I have to zoom out for that. And again, yeah, so again, have to move the camera. Let's put it here. So we looked at the bigger picture, where from the looks of it, we have very nice on the monthly chart, very nice 1, 2, 3, 4, 5 corrective pattern, 1, 2, 3, 4, 5 as a diagonal, ABC corrective pattern, and then here we are currently also having 1, 2, 3, 4, 5. Now in this case, wave 3 is not the strongest wave, but it still follows the rules as far as we know them, which means we're right now in a corrective pattern that, yeah. So yeah, right, if you're watching this for immersion, look, you have a negative forecast, but you have the lower value here and the higher value here. Now for negative forecasts, if we're talking about going down, so if our target would indeed be 669 to 508, then 669 is obviously closer than 508. So the first value should be, if that is indeed the forecast I made, that should be the first value, and then that should be the second value. So when we're talking about an increase, so whatever the closest goal is our first prediction level, and whatever the next goal is would be the second prediction level, which means when we're talking about the stock going down, we would have to consider or write first the higher value and then the lower value. When the stock is going up, we write the lower value, then the higher value. So yeah, so that about that. So yeah, so but again, for immersion overall, we're actually expecting, we have similar situation like with now what did we have? Grab, not just Grab, but also Barnes & Noble Educational. It's possible that we're still going down, and this here is basically a big wave A and a big wave B, and in which case we would expect our wave C to reach a new high. So the minimum target, even though we already reached it, is actually quite irrelevant. But we would expect to then finish somewhere here. So you would expect in the worst case, whatever high we had here at around 20.68. So we would actually expect for immersion to go towards 20.68 as in quotes I mean, that would not be the minimum target to be precise, but no, that actually would be. So above 20.68 would in that case be the minimum target, so if this is a big A, B, C pattern playing out, so we should go above this point here before we then go down in further impulses waves, or this here is wave 1, wave 2, and now we're looking at the next wave 1, 2, so we would be, and here the next wave 1, 2, so we would be in the third wave of a third wave of a third wave, in which case, even from that smaller 1, 2, 3, the target area would be, as we can see, 98.36 or 74.07. So I'm going to take this down as 20.68 because that's my minimum target in this case, and 74.07, which would be, in quotes, not even the maximum target, but it would be where, based on experience or whatever, we would expect 1, 2, and then we get a third wave that slowly takes us up here. Now again, the third wave can also terminate here. It could also hit a higher level, unlikely but possible. And it could also be not reaching the usual turnaround points that we expect, because again, we're talking here about probabilities, and what usually happens doesn't mean that it always happens or is guaranteed. Now, considering all of that, now I forgot to write down the forecast that Ray had on the, let's check, what was it, 669. So I'm gonna double check that one as well, because obviously I have to make sure that 669 that the forecasts that are in the sheet, and where's redo? Okay, then zooming out again. Sorry for the delays here, but can't help it. So what did we say? 20.68 and 74.07. Okay, so again, that's on a monthly chart, which means if we're looking closer, there's obviously the thing that we're still now, daily is even too much, but 3-day chart should work, that we are right now retracing this pattern. Maybe that was the short-term prediction, although 3-day chart is also not that short-term, but we basically expect that we are now looking at a 1, 2, 3, 4, 5, or 3 till here, 4, 5, A, B, C. So basically short term, we would expect either that first wave hasn't finished yet, but we would expect something like this, so that we now get an ABC pattern upwards, and then we get another corrective wave downwards. So it's also possible at first we go down further and so on, but basically we are expecting that we're correcting this 5-wave diagonal. It's not an impulse because wave 4 enters the price territory of wave 1. And very often, I said, we would expect to enter the territory of the previous wave 4, which is this territory here, which we already entered. But visually, while it's possible visually that this is A, B, C, we can also see how that would check out. So, can see we're actually, if this is A, B, how high did we go here? 1407, 14. Okay. So if this is indeed A, B, C, then we would already be at the bottom end of where we would expect this corrective pattern to go. But we would need to look closer to try to label 5 waves, 3 waves, 5 waves to confirm that. I don't think that's necessary right now. So we're just going to keep the option open and say, okay, it's possible that the correction already finished here. We are in the area of the previous wave 4. This could work out as ABC as a 3-wave corrective move. However, we're not at any of the usual suspects in terms of turnaround. If we look closer, maybe do that again, then visually it doesn't look like it's a it would be possible if our wave 5, so if this move here terminates on this candle, so with not a new high, which happens as well from time to time, then this could be 1, 2, 3, no, 1, 2, 3, 4. Nah, I'm not a fan of this assumption that this correction is already finished. So I think the more likely scenario, now the question is how do I visualize that in our document? Probably I don't. So we just consider, I just will have to remember that part. So the long-term outlook, in my opinion, is still bullish. The short-term outlook is that it looks like we have wave A. Maybe that wave A isn't fully finished yet. We get a wave B, and then we get a wave C, or some other kind of combinative correction that might take us down a little further into the area, maybe. So 61.8. So 669 would actually be a fitting target, which is one of the targets that my assistant wrote down. So maybe I didn't clarify it yesterday in the stream properly. I will double check that. So just to make sure that I made the mistake and that there is actually that she's understanding the task properly and capable of capturing the different forecasting levels. Now we're moving on to Intel. I'm not sure where we stopped our detailed reviews yesterday, but probably already somewhere here because then the intervals get shorter. And for Intel, we actually would have thought that our correction is over. So one thing we have in Intel, which is nice, is we have a clear 5-wave impulse, 1, 2, 3, 4, 5, yeah, which means we are definitely correcting this big 5-wave impulse here. And as you can see, from the looks of it, here we already reached, no, not here, but so we already reached our 61.8. So if this is wave A, this is wave B, then here we already have our 61.8 target that we already reached once, twice, 3 times now. The assumption based on yesterday, or what I wrote down, would be 22.19, which does not make, not that it doesn't make it a lot. Let's zoom in closer. 22.19. I don't know where we got that from. Oh, no, that's 21, huh? Okay, I also have to check that. So it's work in progress to have this documentation so that it's easier to see where we're going. Now, visually, I would actually expect that we are correcting only this move. From the looks of it, it's possible. So if we break 21.57, then we are clearly looking at a further corrective pattern, and this would be just an ABC instead of a 1, 2, 3, or 1, 2, and then only 3 in the beginning. If that's the case, let's get rid of a few things on the chart right now. Then we would have to and that would need to 2, 3. I mean, to be fair, it wouldn't look super nice, but then it's possible that this is wave 1, 5 waves down, wave 2, and then this here is 1, 2, 3, 4. Not happy with the looks of it. And basically 5 still to come, which would then again bring those targets here on the table. So especially it would expect us to go a little lower. So I would then expect that we touch the 50% retracement. However, if we zoom out, the long-term outlook is that, like in quotes, worst case. So here we are now on a half-day, 12-hour chart. We have a 5-wave impulse up here. We are correcting right now. We're not fully yet or at the bottom of wave 4. We would actually see that the 100% forecast and the 61.8 retracement and the wave 4 of the previous impulse wave again happen to be very close in the area of 2066 to 2091. So I would actually short-term assume, so I mean 12-hour chart, so we talk about a couple weeks. I would actually assume that it turns out that we get another push down to finish this correction. And however, long-term, the minimum target would be assuming that this is then wave A, wave B. Question is how far we go. So if we go to the 61.8 retracement here, then we would expect our short-term target to be above 2468. Not short-term, our midterm target 2468 and 2752. That would be if this turns into a corrective pattern where we then go further down. So Intel then still goes past. Yeah. Yeah. Like so. The other option would be now what did I say? 2752. I'm gonna write this down right now. Yeah? The other option would be that we are here looking at wave 1, wave 2 in progress, and then we would get a third wave, in which case the targets would be higher. But considering what Intel has been doing lately, I'd say we go with the option that's less optimistic in that quote. So I mean, it's still 30% more, yeah, 30% upside. We're gonna zoom out again as well a little bit, so maybe there. Okay, so here, where do you come from? You're coming from, huh? You're an expansion. Okay, so didn't want to select this. I wanted to select that. Yeah, okay, that's here for assuming 1, 2, 3, 4, 5, and now we get only a correction up. Yeah, so even there, so okay, let's start over here with Intel. So we have a move up here that could be 1, 2, 3, 4, 5, which is then basically finishing whatever last wave there was. Then we actually have 1, 2, 3, 4, 5, or 5 waves down, and should currently be looking at 1, 2, 3. Let's check extension on the bigger scale. It probably, yeah, so it probably hit the 61.8, so that's 1, 2, 3, 4, but then it would need to be a diagonal. Can we have a diagonal here in a wave A? Wave A would subdivide into an impulse or a leading diagonal. Yeah, so there we go. So if that's the case, then we would actually expect that based on if the correction is already over, that our targets would look like this. Yeah, so obviously we're now in a yearly chart, so we talk about multiple years to get there, so that even if this is A, B, and B not finished yet, and then C, that it would be like this. Now let's zoom in a little bit. I know it's gonna get cluttered really fast when we get suddenly 12 candles for each, yeah, but basically 1, 2, 3, 4, 5, 2, 3, 4, 5, or 5 actually here. I think that's a fluke. How does that here check out? Or it's not a fluke. We hit the, no, 3 should supposedly be here unless it's, yep, that checks out. So this is wave 1. Then probably flat correction is wave 2, so A, B, C. And then we have our wave 3 reaching the 261.8 retracement, our wave 4. And then here we have in some form 1, 2, 3, 4, 5 for wave 5. And with that, we finish our 5 waves down here, which means we would now be looking at 3 waves up, but we have potentially 5 waves up here. So in some form, or at least 3 waves up. So 1, 2, 3. Let's check that. It's nice when we're able to figure out the, nope, doesn't check out like this. When we're able to figure out the short term or the long term labeling, because it gives us an idea of what to expect. Yeah. So oh, there we retraced too much already. So okay, yeah, obviously not nice to admit on the stream, but I'm not 100% sure about the previous history here. There are a couple of options and none of them checks out 100%, which means we're gonna have to focus on the downward move here, where we potentially are looking at let's check. Do we have an Intel exposure right now? No, we don't. Yeah, so that's good. I know we had an option trade that expected it to go further down, that went south, but didn't cost us a lot. So technically, we could try to label it from up here, which also doesn't look super promising. Visually, it might be something like 1, 2, 3, 4, 5, which actually might check out. So in which case this might be 1. Actually, this might be 1. Yeah, and where 5 gets close-ish to that line. Or we could label it from here downwards, where this would be also potentially 1, 2. So either 1, 2, 3, 4, 5. Yeah, so 5 waves down. So we would expect at least 3 waves up. Okay, let's see what we can do with that. So, which means right now on the daily chart, we can expect, or what we assume is like 1, 2, 3, 4, 5, A, B, and then C maybe not finished. Yeah. So, yeah. So the bigger picture here is unfortunately not clear to me. But on the smaller picture, we would expect, again, area of wave 4 of the previous impulse wave, which would be 2065. And here that we're currently correcting. And if this is in some form, I mean, it's clearly not a free wave. Oh, no, it could still be a free wave move, just one that's like not super easy to read. We also would get, as said, the 2091. So that would be what we would expect here. Now, if we zoom in a little further, then we would assume 1, 2, 3, 4. So if we do that, and 2 would potentially be here, 3 would be here, 4 would be here. Okay, and then we would get price targets for this whole thing between 2112 and 2065. Yeah. However, so just to be sure I don't miss anything, based on the weekly chart, we would then still expect that this will be A, B, C. So we would still expect upside. Okay, so if we still expect upside, then we would expect that this whole thing then turns out like this, that this here is our first wave of the correction, and our second wave of the correction will potentially finish here, which gives us, when we zoom out again, profit targets between 24.66, which happens to be our minimum target for there, and 27.52. Yeah, so that's what we would expect here. So short term, more downside, but not much more. So to 2066, maybe we spike a little below it. So 2038 to 2091. So anywhere in that range. And then long term or longer term, we would get another 5-wave move up. However, that 5-wave move up, considering that we're uncertain about the bigger picture, might mark the end. Now, and we don't have to reach the 100% target. It would be sufficient if we cross the 2466. So that would be the point where one would have to watch the position closely to get out once it starts to turn around. Anyway, so Intel, not an easy one. Costs, yeah. I might have to consider updating the sheet in some way, because right now we are keeping track of basically prediction and prediction tools. So kind of like it goes up to this value or that value, but we are not considering that the short-term prediction might point towards a different value, which makes it a little bit tricky. So here the written down prediction is 501, which would be down here, which I actually, again, my long-term prediction here, yeah, let's take it from the top again. Not too easy to label. It's hard to know if that spike here actually happened on the yearly chart or not. But if it did, we would be looking at a diagonal 1, 2, 3, although unlikely, with a spike like this 4. And otherwise it would be 1, 2, 3, 4, still a diagonal. So we can only focus on the area from here, because I'm not sure about the spike, if this indeed happened the way it's on the chart. Now, if we look on the monthly chart, we have what potentially is either 1, 2, and monthly chart not sufficient, weekly chart. Zooming out, yeah. So we have what potentially is already 5 waves up, and we're now correcting 5 waves down, or what could be 1, 2, and this is wave 3, and now we're in wave 4. Yeah. Either way, we are currently in a corrective pattern, and in this corrective pattern, if we look at the area that we have here, we potentially either have 5 waves up, or it's actually A, B, C for 3 waves up. Yeah? Now, if it's A, B, C, then we are kind of like screwed on that position, because then we would expect 5 waves down. However, then we still have to consider the bigger picture, where we would still have the option that we are still in. So let's zoom out. Bigger picture is sometimes great, sometimes just adds confusion. So either, as I said, we are correcting this entire move, or we are only correcting parts of this move. So if this is, for example, wave 1, 2, and that's wave 3 only, we would only be correcting this. Then there is not much more room for a movement down, because then the pattern would become invalid. Now, if we're correcting this entire move, then theoretically, I like the idea that we turn around at the 78.6 retracement. If we break that very often, it means the pattern will become invalid. So yeah. So long-term, the assumption would be that we are definitely going up. Yeah. Price predictions are hard on the long-term weekly chart here, because we're talking about such a huge price range. Let's actually check if this is easier to label. No, definitely not easier to label if we don't have a logarithmic chart. But short-term, it means that one question is, did we finish our corrective wave here already or not? Even if we did, then we're looking for 1, 2, 3, 4, 5 upwards. If we didn't, then we're looking for A, B, C or A, B, C before we go further down. Yeah. So if we just focus on this part here, it's going to be a tough sell to see 5 waves here, to be honest. Yeah. So I mean, well, we definitely have some 1, 2, 3, 4, 5 going on in here, and then A, B, C. Hi, Olga. Great to have you here. Yeah, I was already wondering how you're doing, or like where you've been. I assume also the time switch on the weekend makes you, in quotes, an hour late. Yeah, like it did me on Monday. Had to update my calendar to switch the entry for the stream to use the New York time zone, so that it automatically adjusts when there is a time switch either for us or for them. But yeah, I hope you're doing fine. I'm just trying to work out, actually, yeah, like, so I'm actually started a list that I hope my assistant can maintain by watching the recordings of the stream. And I'm currently trying to provide a little bit more detailed labeling for the different things that we covered so far, and double checking what she wrote down. And I'm right now, what's the word? Yeah, let's say going crazy with costs. So because the bigger picture is not as clear as I would like it to be. So because it could be, I'm not sure if that candle here is a fluke on the yearly chart, or if it actually happened. Even if it is not a fluke, then it might be 1, 2, 3, 4, 5. Then wave 2 down, and we would now be in wave 3. And if we're looking on the smaller chart, it's hard to, especially here on this move here, to see 5 waves up. Yeah. So we have relatively clear 5 waves in here. So 1, 2, 3, 4, 5, and then a correction A, B, C, and potentially we also have 5 waves in here. 1, 2, wherever 3 and 4 and 5 are there. Yeah. So let's see. Yeah, could be with a truncated 5th wave. So basically 1, 2, 3, 4, 5. Yeah, and which would make this 1, 2, which would make this a 3-wave move. So wave 1, wave 2, wave 3, which would be a corrective move, which means we would be followed by 5 waves further down. Yeah, which makes although our cost exposure is not too high, but which makes the further outlook tricky, because especially the combination with this here. Yeah, I'm actually gonna have to, I'm gonna adjust my in quotes opinion here. Yeah, and just not have a prediction for cost. That seems like the safest bet right now, because I know previously I assumed that we're correcting this huge move, but now looking at it again, it just feels like like this is a 3-wave move and not a 5-wave move. And yeah, so we will keep an eye on it since we have a position. I wouldn't want to set a stop loss, to be honest, here, because like I don't know, like I think especially if we consider that the yearly chart might indeed be 1, 2, 3, 4, and then 5, even if it didn't go that high, yeah, then we would have what's visually wave 1, wave 2, and the beginning of wave 3. Obviously, then a yearly chart means really years. So yeah, like if we have to hold that position like for years, but it pays off like this, then I also wouldn't care much. In short term, it's tricky. Do we have 5 waves here, or is this just 1, 2, 3, and we're only correcting the third wave? If we're only correcting the third wave, then we already went below the 78.6 retracement, which something I don't really like. If we have 5 waves, which is possible as we checked earlier, then I like this as the end for the corrective pattern, and we should from here basically develop 1, 2, 3, 1, 2, 3, 4, 5, and yeah, like so. As long as we don't go below, that actually would be the fitting stop loss at $3.81. I mean, it would be a sorry, I'm just taking notes. So it would obviously be a 62% loss on my position, but it's thankfully not a very, very big, very big position. But if we break the 381, then this cannot be 1, 2, 3, 4, and 5. Yeah. So with another push up. But it would mean then that we are in a 5-wave move down, and this was just some ABC corrective move or so. It's gonna be, yeah, we're gonna have to keep an eye on it, but I probably will just, so I'm gonna refrain from a prediction. The yearly chart would say super bullish long term. Monthly chart would say, yeah, like super confusing short term. So like this candle spike here is a little bit of an issue, to be honest. Yeah. So it could, I mean, even here, 1, 2, 3, 4, 5. So we have wave 1, 2, 3, 4, and then wave 5 in that area here somehow. And then there we also have a relatively high or not. Like here it says 500, and then no, there it's just the averages that spike. Yeah, so probably that candle is a fluke, which would be yeah problematic. But even so, here we definitely have a 1, 2, 3, 4, 5 move, so 5-wave move. Yeah. So if we have 5 waves here, even if that candle is a fluke, but then that would be potentially ABC, and then the pattern would get invalid with that push up here, which means we would need to start labeling from here. If we start labeling from here, then we're in the exact same problem that we are not certain if we have 5 waves here or 3 waves, but either way, that part of the pattern still should be impulsive, and it still should point towards giving us another move up. Yeah. So the tricky part is this part here. So the last couple of weeks, are we there still in 1, 2, 3, 4, 5? I would like to have a prediction, or at least an opinion that I can, like do something with. That actually might make more sense than what I've been seeing or thought I saw on the chart for the last couple of weeks. Yeah. So what if this is wave 1, 2, 3, now 4, maybe even finished here, and we indeed are looking at wave 5. Yeah. Does that help me with a profit target? Maybe, but only if wave 4 is finished. Then we would expect 1744. So I'm gonna write this down. Yeah, I might be off here, but that would be minimum target for 1, 2, 3, 4 if we are finished here, and 5. Now the big point here would be if we break the 652 to the bottom, then clearly the correction is not finished. And on the downside, we could have our stop loss as set by 381, because if we break 381, it's definitely not 1, 2, 3, 4. But I just got it wrong in that case. Okay, so yeah, you're saying can't wait for the partnership with GameStop to work out well for costs. Yeah. Yeah, hard to say, you know, like, I mean, at the end of the day, it then comes down to yeah, like how much revenue and exposure that gives costs. Why is that value should be bought? Okay. But yeah, based on the pattern, it became a little bit confusing. I don't know why I didn't notice it sooner. But yeah, so we're going to move on, and the next thing we're going to try to label. We're not going to, so it's not going to be that long anymore today, because we're already in overtime. The Nasdaq we push to later because it's bigger, and we will not label it very, very thoroughly right now. But NEO is the next one on our list. So right now, my assistant wrote down, based on yesterday's episode, 469, which might be possible. So I might have mentioned that. Yearly chart, no use. Monthly chart, monthly chart is interesting. Curious. Yeah. That's the thing. Like, I mean, visually with the naked eye, this looks like one move up, one move down, yeah, which is from the bottom, which would make this a wave 1, a wave 2, yeah. And as I've been saying, very often the third wave will terminate around the usual suspects. Now we have to consider we terminate, or we turn around here at the 161.8 retracement, but we don't have a visual corrective wave here. We don't see it. So it's more likely that our wave 3 ends here, which would be, again, very close to the 261.8 retracement. I mean, in that case, very close means still $7 away, yeah. But overall, still a solid hit in quotes, yeah. So, or like solid enough. Now, the only other option would be that this is a corrective pattern, yeah? And if that were a corrective pattern, we can see that even if we consider our maximum target, we exceed it. So, which doesn't mean that it's not possible. It just means it's less likely that this is a corrective pattern. It would be followed by 5 waves more down. Yeah. Now, considering all of this, it means that potentially we're looking at 1, 2. We're actually going to start labeling things, but there we need a diagonal, yeah. And the diagonal is going to label it differently, of course, or the auto labeling is going to label it differently. Yeah, we need a diagonal. So. And if it's a wave 1, we need where are my tools, Elliott Wave, leading diagonal. So I'm not a huge fan of the super drawn out corrective pattern, and we have to check that the low is 363 and that the low is 361. Okay, so I'm not a fan of this part, but there is also the rule of alternation. When wave 2 is a simple and easy corrective pattern, wave 4 is a more complex one, and vice versa. Yeah. So the look of this, and especially, I mean, in a diagonal, yeah, I don't. Okay, I'll have to rethink that, yeah, because like so visually I'm not a fan of this. So of the look of the wave. So like the duration of wave 2 versus the duration of wave 4, yeah. I think it's possible, but it's also possible indeed that the auto labeling has it right, and we're looking at this, yeah. So that would check out more in terms of the overall look, yeah. So because then we would have 1, 2, and maybe that is a complex corrective pattern. Just on the monthly chart, it looks like, oh yeah, easy. And then we have 3, 4 in here. So we still bounce at one of the usual levels, just not the 261.8, but the 161.8, and then wave 5 here. So that also would check out. Then wave 2 is a complex corrective pattern, and wave 2, let's check if that's like this. Retraces probably 61.8%, a little bit more actually, yeah. So yeah, so that would be possible that we're basically looking at 1, 2, or A, B, C. Either way, it would mean, if we have our bottom here, it would mean way more upside. Yeah? Now, if we use some general or more generic tools, and yeah, like there, we are still far away. So if we, like like that would probably, yeah, that would probably be the first mark. I mean, I know we have the false, so unconfirmed breakout here, but if we connect those dots, we basically connect most of the candles here. So, but obviously then we have to consider that the next better one would already be something like this, and that one we didn't break yet. Yeah. So now, but on the monthly chart, we would assume that potentially we reached our bottom here. So we're going to focus on this area right now. If we zoom in, and on the weekly chart, that would mean we would expect. I know we have 5 waves up here that we focused on extensively during the last couple of weeks, and I know there's a lot on the chart right now. I'm gonna get rid of a bunch of it, yeah. But that actually, that I didn't want to delete, that's what we just added. So we actually bounced from that second line that we just added on the monthly chart. But this actually here brings up this option as well. So it could be that we're not done yet here. So assuming we have 5 waves here, A, B, C, 3 waves down, yeah, then we would have, yeah, not a perfect zigzag, but still one within the parameters, which would then be followed by 5 waves further down, yeah. So which would be 5 waves, 3 waves, 5 waves. We've looked extensively at this part here on lower time frames and had next to perfect 5 waves in there. So we'll have to consider the possibility that this is just a correction upwards. So we're in a downwards movement, therefore a correction goes up, and then the next impulse goes further down. Yeah, stupid Elliott Wave Theory with all its flexibility, yeah. Okay, which means we are going to actually right now focus on this part. I know we already have, but we have to be aware that the long-term outlook would support also the idea that we're going further down. The short-term outlook, we're going to zoom in here quite substantially. The short-term pattern was wave 1, wave 2, wave 3, wave 4, wave 5. Yeah, so which checks out quite nicely. Now I'm going to get rid of the base channel here, also that copy of the channel that we don't need anymore. We had the breakout from the first trend line that we set. We bounced from the second one. If we finished 5 waves here, we would expect to retrace into the area of wave 4 of the previous impulse wave, which is this magic area here, which we already did. The question is, did we finish our entire correction down here, which is possible. I mean, we're getting close to the 61.8 retracement already, which would be a common one, which again would happen to be area of wave 4 of the previous impulse wave of a lower degree. And depending on how this corrective pattern is, so if it's like, I don't know, like this, we can see that the 100% target area would also match here. Right now would actually be an interesting entry point because one could set the stop loss at 497 or 496 at the low here, because if the correction is finished like this, we should not reach that point and should instead go up from here. So it would be less than 10% risk with an insane upside to the top in comparison. However, one has to consider it's also possible that we're looking somehow at something like this. So where this is wave A, wave B is not finished yet, but turns out it's A, B, C, in which case an entry right now with the stop loss here would still pay off, but we would just go, yeah, we need then a second expansion. So then this would be just the wave B of the overall correction. So we would go, for example, here to 629. And then the minimum wave C would still, so this is wave A, this is wave B in progress potentially, which means again, wave B would subdivide as A, B, C, minimum point would be here. And then the wave C minimum target would again overlap with the 61.8 retracement. Yeah? So while one could enter now and have the stop loss down at $3.63, which is obviously a bigger risk, especially considering that the overall pattern on bigger time frames supports the idea that we're going further down. Just focusing on an 8-hour chart, it looks like we have 1, 2, 3, 4, 5, and are currently either already finished with the correction, again making an entry right now, not such a bad gamble in terms of risk-reward ratio, because we would expect, even if we are wrong, so if we're partially wrong, and the correction isn't finished here, that we still would get at least A, B, C for some more upside here to make a profit and just have a trailing stop or set the stop loss higher as soon as we see some upwards movement, to ensure that we lock in profit, because nobody so far lost money taking profits. Yeah, and that would be one option. The other option is to just wait a bit longer to see how this plays out. On the short-term scale, I think it becomes really interesting once we break this trend line, for which we anyway have to see the beginning of a 5-wave impulse up. If we zoom in further, it's gonna get cluttered, and it's hard to label this as a three-way corrective move. But again, as said, if we were to enter right now, our stop loss could be here, so 496, and therefore the risk is relatively low. If we're wrong, the loss would not be that big. If we're right, we should get to see the next 5 waves up, assuming that this is some kind of 1, 2, 3, 4, 5, or 1, 2, 3, 4, 5, which means corrective wave followed by next impulsive wave. So not sure what to write down about NEO here in that case. So I think we'll go up, but so like that's one of the things. This wave we labeled nicely and got out close to the top, but the corrective wave that we're currently in, including and also the bigger picture, are a little bit challenging to label, because this could also be, as I said, or I think I said, just part of a correction, even though we would exceed the ideal target. We still are within the 161.8 expansion, so it's still possible. So this could just be A, B, C, and we're right now looking at wave 1, A, B, C, wave 2, wave 3, wave 4, wave 5 to go further down. So that's why potentially so if I wouldn't be tied up in other positions already, I would right now say, okay, option number 1, make the entry like I just showed. So with the stop loss at, what did we have, 496 or something like that. And basically assuming the correction is over here, because we have a few things that point towards that direction. And option number 2, wait until we either have a confirmation that we're now again in a 5-wave impulse up, or until we go lower. And then if we wait, what would we wait for? We would wait for just enter further down below. So if this turns into a big ABC, so like here, 78.6 retracement actually. So $4.06 to $4.27. I would not call it a prediction right now, but considering the possibility that this is ABC followed by 5 waves down, we'll have to keep in mind that this is possible. But again, right now, an entry is not the worst idea, because the stop loss could be relatively close to say, okay, either the correction here of that 5-wave, of that potential 5-wave move is finished, which means more upside, or the risk. So we already see here that we have more than 20% upside just on that small time frame, or wait and then consider entering here and here, but then the stop loss would need to be down there, so the risk would be bigger in case it turns out that the overall downwards labeling is the right one. I'm actually going to remove NEO from my forecasting chart for now, so clear, delete rows, because we don't have a clear forecast. So I'm gonna just throw a horizontal line on the chart here to mark our where we would assume that the pattern is a bigger downwards one, so we're not done with the correction here. And we're going to move on, and we're going to rush through the rest because we're already in overtime. And then tomorrow we're going to try to dive more detailed into Novavax, NVIDIA, SPY, and the Nasdaq if we manage all 4. For today, NVIDIA is going down a little bit, and it actually touched now the, in quotes, expected maximum target that we had here, 161.8, which happens to be close to the 61.8 retracement. We actually almost touched the 78.6 retracement here. So on first glance, this means that either our correction finishes A, B, C, and this would be a great entry point. Stop loss could be at 128.74. It also could mean that we are looking at a bigger correction, and this is only 1, 2, 3 in progress, 4, 5, then we get ABC, and then we get another correction, so that we actually are correcting this entire move. Yeah, visually, based on what we saw so far, I expect we're only correcting the smaller move, which means for NVIDIA, I still think, where do you come from? Yeah, we have 5 waves here, so 1, 2, 3, 4, 5. Correction, we potentially have 5 waves here and are correcting now, which means we should get another 5 waves up. And we turn around perfectly at the 161.8 retracement, which is not the one we're hoping for, but checks out kinder. Which means if the correction is already over, I'm gonna undo that. I'm gonna assume that right now, so that the correction is over and that we pretty much are looking at this. So wave 1, wave 2, wave 3, wave 4, and wave 5 should then be for NVIDIA 150.79 to 162.17. So again, stop loss in this case would need to be technically either here, so at 114.70. Did I write it down right? Yeah, 150. So 114.70 or as low as 195. So the 100.95 stop loss would be, in quotes, the safer one in case we're somehow correcting this entire move. But visually, I assume that we have here wave 1, 2, which means that would also be a correct stop loss for long positions, unless, again, we're correcting the overall bigger move. There's also the, 1, 2, 3, 4, 5, ABC. And there we also supposedly have 5 waves already. Yeah? If we are only correcting this move here, so here, what are you? Your retracement, yep, go back. Then the stop loss could also be at 128.74. So under the assumption we're only correcting this 5 wave move, A, B, C, and from here we're going up. And considering the levels that we already hit, yeah, it's not the worst play. Again, it's not perfect in terms of pattern, but on the other hand, it's also risk reward is not too bad. So do with that what you will. And moving on, SPY, do we get SPY is red today. Yeah, there we thought we might be done with the correction. So we based on this here, which clearly is not the case. However, if we look at this, it looks like we are actually getting this, and we would now be at the 100% target, a little bit below 61.8 retracement. Personally, I would, just like NVIDIA, I would consider not a bad entry point here. Stop loss could be at 565.40, which is 2%, 1.5% risk, with upside more. We'll dive into into SPY either tomorrow or next week in one of the episodes to work out the bigger labeling, but just on the smaller scale, that would be right now. Although I have to admit that yesterday, or based on what I had on the chart from yesterday, I was wrong then yesterday. Yeah, like it's so hard to recall every forecast and every prediction. Yeah, but we'll get there with our tracking sheet and whatnot. Although again, it's not perfect yet. And yeah, anyway, finishing up for today. So the Nasdaq gap to the bottom today actually bled a couple hundred points. Interesting, which is tricky. We still haven't reached our expected target of 20,700. I mean, we reached 20,500. That actually I would need to adjust, considering that we went higher here. No, that was for this one where we have 38.2, so that one's irrelevant now. We probably have 5 waves finished up here, so so one possibility would be that we're correcting this, but we already fell quite hard in that area, so that makes this less likely. That correction actually worked out nicely. Then we have 5 waves here, we have 5 waves here, so 5 waves here. 1, 2, 3, 4, 5. Okay, that that actually might make sense. We're right now correcting this entire move. And we actually are then in the area of wave 4 of the previous impulse wave of a lower degree. And while we don't clearly see the pattern here, but we're also missing the overnight data from the futures market, we actually bounced close to the 61.8 retracement. Now it could go further down. Would be surprising. So, I mean, I've been bearish on the Nasdaq for quite some time. And I would not be shocked if eventually we'll have something like a Black Monday. But obviously, I would love to be invested in that time. So obviously betting against it. And visually, if we're correcting those 5 waves, we reached already the level that we would expect or that we would consider possible. Yeah. So, and how would that? Yeah, we need the bigger picture here. So as you can see, there are like, not sure if we, with the naked eye. Oh, we have that on the chart in. I mean, we reached the minimum target for the assumption that this is somehow ABC. We did not make a new all-time high, so 20,600, 20,619. So it is possible, tempting, yeah. Although then there's still a lot of time to jump in, even if we have a huge red day, yeah. It is possible that we're looking at something like this. So 5 waves down, ABC, yeah, not making a new high. And I would actually expect to get down till here, obviously not in a day, but we'll have to try to label this. I'm actually all of it. So because visually this would be 1, 2, 3, 4, 5. So there's also the option that right now we're tracing all of this. In which case we also would expect 1, 2, or A, B, C to at least down here or potentially further. Yeah. So yeah, we'll need an episode where we dive into this deeper. I'll actually have to take some time to think about how I can optimize the stream, not just for the value that it provides everyone that tunes in, but also for the value I get out of it, out of the time. So, because clearly we regularly need to double check the bigger picture. Yeah. So, because if we look at the bigger picture and then we work our way down into the lower time frames, and then we keep with that, but we don't double check regularly if the bigger picture is still the same, or if something in quotes based on new candles on the chart developed there. Now, obviously, the yearly chart will not change every day, yeah, and the monthly chart will not change every day. But I'll probably need to bring a little bit more structure into that. That I don't know, that we work from the yearly chart our way down once, and then I don't know, like every month update the weekly chart, because then we have 4 new candles on the weekly chart. And every week update the daily chart, so we have 5 new candles on the daily chart, and so on. So that basically that we get into some kind of flow where we have, okay, this is our starting pattern / prediction, and but that we have regular streams where we circle back to the bigger time frames. Yeah, ideally we would label mostly the 1 hour time frame, but for some individual stocks, that does not make sense that much. So because they might not have, I mean, obviously Nasdaq is not an individual stock, yeah. But if we look at, I don't know, immersion on the hourly time frame or so, you can see it's choppy data because there's not always trading activity or movement. So that doesn't help us in any way. So on things like immersion, we probably would use a 4 hour, maybe 8 hour time frame to label continuously, or maybe even, yeah, we can see even a bit higher would work, yeah. Whereas for the Nasdaq, labeling on the hourly chart would probably be best, yeah. Yeah, I'm open for ideas. When in doubt, zoom out, yeah, 100%, yeah. But that's the issue. It all comes down to time dedicated, you know, like, so I would like to have the as said, so for example, this prediction sheet maintained well with when did I make the prediction, so in which episode, when in the video, so that we can easily refer back to it and jump back to it. What is the prediction? And then basically see and monitor if it comes true. And if I make a change to a prediction, so if I don't know, if I think something will go up like this, and then in a week the pattern changes, or I see just from a different angle and decide, oh, I was wrong, sorry, I can update it and point out, okay, so the latest valid prediction for everything is like easy to find, but I still need to somehow be able to recall on the spot for every episode, okay, how does the overall pattern look? Yeah. Now, maybe if we switch to multi-time frame labeling, so instead of just having the chart open once, I could have the same chart open multiple times, but linked. So it's the symbol is linked, but the time frame is not. But then also it would take up space. So if I switch to, can I even do that here? So I'm not sure if that works. So yeah, I could. No, that was a bad idea. So that would, that actually would work. Yeah. So now they're not, or now they're actually linked, but just symbol. Yeah. So time frame not. So if I switch this one here to, for example, daily, and now we switch to Intel. Yeah. Then that one is daily. Yeah. Okay. But then it probably would be better to have it like this, but I don't know, it feels like it's also a lot of information. So it's like, or it's taking away information if I do it like this. So if we would have that, like then multiple time frames visible, and we can basically label both of them simultaneously. So I'll have to think about that. So I know there is a way to do it in a way that it works, yeah. But the issue is obviously, considering the limited time for the streams, I also should be able to recall, which the spreadsheet already should help a little bit with, but we still should regularly or reasonably often enough circle back to update and re-verify the bigger picture. So obviously on some charts, the bigger picture just doesn't make any sense. That's okay, especially on individual stocks. It's possible that you don't have a valid pattern throughout the history. But yeah, like it should still be, because it's like tunnel vision. You look only on the hourly chart, and there you have a nice 1, 2, 3, 4, 5 pattern or whatever. Yeah. And then you expect just a corrective wave and the next 5 waves up, and you have then higher profit targets and whatnot. When in fact, on the bigger picture, it suddenly turns out that you're overall in the downwards impulse. So in a bearish impulse. Yeah, I'll have to think about that. So I think we covered some ground today. I also have to double check the predictions that were previously in the chart based on the work my assistant did. So it seems, I think she made some mistakes there, which also would be a big issue, because then I might share something, but she might understand the wrong price levels and put it in the sheet, and then next day I look at it and it somehow doesn't make sense. So I have the wrong bias, then in quotes, because of the wrong information. Yeah, like, so it's work in progress. In my interest, of course, to manage their own positions better, but also to have more accurate forecasts and be able to faster account for alternate labelings. That's also something we might want to incorporate, but it's going to be a little tricky. The software is capable of doing this, so I can just say, okay, new analysis, and we can have like one labeling for whatever this possible pattern and one labeling for the other possible pattern. And as the chart develops, then basically just look which one is the most likely. But yeah, like, I don't know, like, I mean, the ultimate solution is obviously dedicate more time. If I would stream longer, today is already longer, of course, yeah, so than usual, because I don't have any calls scheduled now. But if I would stream longer in general, then there would be more time to go into detail, to prepare multiple labelings and so on. Or another solution would be to cut down the number of assets that we are following. But that also means potentially missing out on opportunities. So maybe it's a mix. So maybe it means on one hand incorporating the scanner so that we can use to say, okay, here scan my watch list for potential wave 2 movements, which would then point towards entry points for wave 3. And yeah, what if, yeah, I don't know. Like, so what if we cut down on the number of assets we look at, but that gives us more time to look at them more clearly, label them on multiple time frames, maybe even with primary and alternative labeling. So because again, in many cases, you have more than one valid pattern on the chart. And then maybe every day, I don't know, pick one extra stock we look at or so, yeah. Or maybe just focus on, I mean, I would say focus on NASDAQ because I labeled that for quite some time. But the options for the NASDAQ are too expensive for my small portfolio size. So focusing on SPY might work. So, but then, yeah, like, I don't know, like, so yeah, it's a pity. So on one hand, I'm clearly, yeah, like, I wouldn't say unhappy with how it's going right now, but I think we caught some good forecasts over time. So like the NEO exit point and so on, to mention just some very recent, or the recent Barnes & Noble Education entry point at 845 and so on. So we caught some good patterns and solid patterns and so on. But I also feel that the overall results could be better. Which again, either by dedicating more time, which would be what I wouldn't like to do, or maybe by just focusing more on a narrower field of either assets or I don't know, yeah. Yeah, I'll think about that, and probably I'll bring it up tomorrow as well. But as for now, we'll continue like this with the list of stocks that I already have on my sheet, and tomorrow we basically will look closer at NASDAQ, or actually Novavax, Nvidia, SPY, and NASDAQ, which we might not all manage tomorrow, but yeah. According to the scanner, Nvidia is in wave 2 on the 2-minute time frame, or 1-minute time frame. So, but on a wave 2 downwards. So the order labeling suggests that this is what it looks like. Interesting. So, although just look, which again, like even if we use the scanner, we would now need to zoom out to try to verify, is that overall labeling correct? Because this could also be 1, 2, 3, 4, 5, A, B, C, and from here we actually go further up, yeah. Although visually it looks like we have a 5-wave move, or not even a finished 5-wave move down here. So yeah, like that doesn't look like a 3-wave move on the 1-minute chart. But the 1-minute chart also has the problem that obviously the playing options there doesn't make much sense. And playing with shares there, we would basically be scalping small movements. So like here, the moment we notice that we're going up here, we would be able to enter at 133.73 or so, and we get out like with less than $1 movement. And then considering commissions and so on, and that would only work if I'm actively monitoring it. So like 1-minute time frame definitely, or most likely off the table. Anyway, I'm gonna quit. I'm gonna call it a day for today. Not fully happy with what we covered today, to be honest, but I hope you were able to still take something away. Olga, it's been great to see you. Yeah, as mentioned, time switch. So therefore, right now, actually, we are at German time. It's like 2:25 p.m. And I think that's till next week. So so this weekend, if I'm not mistaken, there's also the switch in the US, and the next week we are back at 3:30 or 3:25 p.m. Yeah, so that's at least what my calendar now shows. So it's twice per year where the stream switches by an hour German time, because we already have the switch from summer to winter time, or vice versa, and the US doesn't. But yeah, anyway, thanks for stopping by, Olga. Thanks everyone else that lurked. Don't forget, like, subscribe, enable notification. Have a great rest of the day, and then we see each other again tomorrow for another episode of Daily Market Mastery. Till then, bye-bye.